Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, just keep in mind that there's risk involved with each trade that you take, so you want to manage risk in a way that makes sense for you. And we'll go over some ideas in that regard if we simulate a trade or two. There are some tools within the order window in our app and WebTrader that makes the risk management side of things quite a bit simpler. Also keep in mind that as we go over ideas and concepts that it's coming from an educational perspective and not to be taken as financial advisement. Now, from our main website, we can log into the WebTrader platform, which allows you to trade on both MT4 and MT5 accounts from one location. And the same is true with our mobile app. And you have a lot of advanced tools within our WebTrader and app that you won't have when you trade directly from the MetaTrader platforms or apps. Now, from the main chart area here, we can navigate to some of the tools for fundamental analysis here with the sidebar. Before we do that, we could talk about some pretty big headlines fundamentally that have come out in the past 24 hours or 48 hours. Or so. One, if you're following the conflict, the war between Israel and Iran that was occurring in the Middle East. Obviously, there's been somewhat of a resolution to that, a peace agreement or ceasefire, and there are negotiations to come between the U.S. and Iran. Maybe Israel will have some say in that as well, in terms of what are the rules going to be moving forward to try and prevent the war from breaking out again. So we'll see what kind of peace agreement there could be that could be put together. But that whole situation, which was causing the markets to pull down quite a bit in terms of the equities, and people were kind of doing risk off type moves, and we saw crude oil spiking up with fears of supply disruption, volatility index was climbing, etc. And then with the agreement, the ceasefire, we saw a lot of that reverse. The equities are climbing now for the past couple days. Initially stronger, yesterday not as strong, and then again a nice rise today in the equities. And we saw the spike that crude oil had done when there were fears of supply disruption kind of reverse itself, and crude oil made its way back down quite a bit. So maybe some bearish pressure on crude oil, bullish momentum on the equities right now, as there's optimism about the ceasefire holding and maybe some positive outcomes from that situation. Now, the other big story is Trump has made some comments regarding U.S. policy. He keeps criticizing Jerome Powell's decision not to lower interest rates, and he doesn't agree with the policy stances over the past number of decisions where the rate was held the same, while other countries such as the European Union and other areas have been lowering interest rates as inflation has come down. The fear with the interest rates is if you lower them too quickly, inflation could come back. So we understand Jerome Powell's thinking. The other side of it is if you don't lower interest rates down fast enough, you could stymie the economy. And so we see in the US that inflation has dropped, not just dropped, but dropped faster than expected, with some of the numbers in normal circumstances, when they're missing the mark by so much, you'd say that's negative. The markets have cheered that inflation has come down faster than expected, with the CPI data, the PPI data, all of these different economic indicators coming in lower than expected week after week. Trump is ringing the alarm bell saying, well, then we should lower interest rates before the economy slips into a recessionary type direction. Powell thinks that it's not necessary yet to lower interest rates. And so the headline in the last 24 hours is that Trump is thinking about getting rid of Powell and appointing a new person early. Presidents have shied away with that or from that in the past in the U.S. because it's considered to be kind of a no-no to use your presidential powers to manipulate how the monetary policy decisions of the FOMC committee and the chair, Jerome Powell, to try and control those decisions. And so, like it or not, the Trump administration very well might replace Jerome Powell. Now, that gave extra momentum when that news came out to the equities. The major indices, the stocks are climbing with some momentum. Why? Because they anticipate if Trump did get rid of Jerome Powell and appoint a new person, that he would appoint someone who thinks along the lines of rate cuts are needed. And Wall Street and the different indices out there, they like the idea of lower interest rates. And so especially the US companies and the US indices are responding in a bullish fashion to that headline. So we can quickly take a look at what's happening with the US indices in particular, but there's a global effect as well. There's more than just the US indices being affected. Let's keep that in mind. These are 5-minute candles, and we certainly see a climb across the screen. If we go to 2-hour candles, we see this rapid climb over the last couple days. Again, this was not just related to Trump's comments about Jerome Powell and a potential replacement, but also the peace agreement that Trump helped broker between Israel and Iran. And maybe it's not a peace agreement, but a truce anyways, and then working on a peace agreement. So this is coming into this week with that good news about the ceasefire, and then now extra momentum again today with the news about potentially Jerome Powell being replaced. We'll see if that happens, and if it does, when that might happen. There's no guarantee of any of that, but that's created a lot of momentum in the equities right now. So, you're working against that fundamental news if you're trying to sell from a high point right now. Looking at the charts, it's made more sense today to buy from the low points. So every time it's pulled down, 5-minute or 15-minute candles, okay? Each time it came near this support level, right back up. Came near the support level, right back up. Every time it pulled back, it goes back up. You see, each time it pulls down, it's going back up. Here was a pullback here, and it seems like it's trying to bounce again, barring any changing headlines, large headlines to change the momentum. This is a strong uptrend so far today. Okay, so pick your spots, but if we look at larger candles, 1-week candles, we're at all-time highs. So if I want to get rid of some of these old support and resistance levels from the past weeks, what we see is the markets are off and running to all-time highs on the major indices in the US, and we just broke this resistance level here. Okay, so this was the last resistance level from the prior all-time high, and you see this week we just broke it. So that's what I mean by off and running. There are no more resistance points because we've gone past them all when you're at an all-time high. So then you start to look and say, is the current fundamental news good news? It seems like it is currently for the equities. There are some announcements coming today, so you keep an eye on those, but they don't seem to be of such importance level that it would kill the type of momentum that replacing Jerome Powell might create. So it's something to keep in mind. And so if the equities are rising because of maybe cheering the idea of rate cuts maybe being more likely moving forward, probably the US dollar is weakening because Rate cuts tend to weaken a currency. So even though there haven't been any rate cuts yet in this new situation, the anticipation of rate cuts is enough to preemptively weaken a currency. So pick your spots here, but it looks like buying opportunities. If you like the technical entry points, could be some nice buying opportunities here on the US equities, okay? And we can do the same if we look at the US 500. Also all-time highs or nearing them. We see it hit and pulled back. And here's a little support level. This was resistance from, looks like early this morning. Resistance, 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 and then pullback. Actually, this was yesterday afternoon. And then here we went and just broke past that resistance in the past couple hours. So we've got a nice support level here in the US 500. This might be something that if you're interested in buying on, it sets up nice with the support level below. So if I was going to do a buy, stop loss, then I would put below this resistance level here. Resistance, resistance, resistance. It pulled back and bounced off of that level. So this is a support level now that got broken past the old resistance. And so stop loss somewhere down here, say 61.55 could make sense. Take profit. There's no resistance up above if these are all-time highs. Let's check the 1 week candles. The NASDAQ was all-time high. US 500. Let's see. Yeah, we're in all-time high territory. You see the resistance levels here. So it's trying to break through. Let's get rid of this line. Let's put this line on the all-time high. Right there. Okay, those are all-time highs. And now if we come back on the smaller candles, there's the all-time high. Okay, it touched the all-time high and pulled back. So it could make sense to do a pending order, execute when price hits. This is why combining fundamentals with technicals makes sense. And if it breaks the all-time high, that's not just the high of today. You saw in the 1 week candles, that's the all-time high from weeks back. So technically, people sold when it hit that price because it was the all-time high. Boom, they sold when it hit there. But you see it's challenging again. It didn't just plunge down. So the momentum is still there. If it breaks this all-time high, you could see a surge right through if it breaks the resistance. No guarantee, so we'll put a stop loss. But technically speaking, this sets up nice because we're just below the all-time high. We're with the NASDAQ, it already broke through. So if it hits 61.73, it's at a new all-time high. Okay, so 61.73, 61.74. So execute when price hits 61.74. And the directionality on this pending order is based on the fundamental news. Okay, that's the whole point, is to understand which direction you think the wind is blowing fundamentally, and then you can work out the technical entry points. This is a technical strategy waiting for an uptrend to be confirmed by breaking the resistance level. And many times if you break an all-time high resistance level, there's momentum and it carries for a certain distance. Not always. Sometimes you get a false breakthrough and it pulls back down, but we already had one pullback. So let's see if it breaks through and carries. So when it hits 61.74, we're in. Stop loss then, back down at below that resistance. Let's say just below where it's sitting now. So back below this current candle would be 61.60. It would have to come back below this resistance level down to here to hit the stop loss. And take profit. There's no resistance up there, so you have to pick a number that might make sense in your mind. You can pick a round number like 6,200. Okay, a lot of times when there are no candles to find resistance levels because you're at all-time highs, then traders will just look at the next round number as a spot to potentially sell. So if this does get triggered and it starts climbing, the next round number, 6,200 even. So I might take profit at or near that level, assuming this triggers and climbs. And that puts us at almost a 2-to-1 ratio, potential profit to risk. All right, then we're looking at adjusting the trade size to be the amount of risk that you're comfortable with that setup. So if I go with less than one lot here, let's say 0.4, I'm risking a little over 1% of my balance. Maybe I'm comfortable with that. Maybe I want to get down below 1%. It just depends on your risk tolerance. But you can adjust the lot size once you get your trade set up in to be the amount of risk you're comfortable with. So maybe I want to risk about 500 per trade. And so I'm adjusting that trade size. 532 is a little less than 1% of my balance. So maybe I'm okay with that. And I'm going for nearly 2% profit on the move in the direction of the fundamental news right now, waiting for a technical breakthrough to show an uptrend before entering. Okay, and so if I like the setup, then I click buy, and you'll see this is listed as an order over here because it has to hit the trigger price to open. It's a pending order. So we can view it on the chart here and see, here's the setup. Here's the trigger price. It has to come up, break this resistance, and hit the trigger price in order to open. Then the stop loss is back below all of this down here. It would have to break through the all-time high and then decide to reverse and come clear all the way back down below this support level and below this support level to hit our stop loss. So it seems like a pretty secure stop loss if it's a real breakthrough, if it breaks up and hits our entry price. Hopefully that's real momentum, and then it carries up towards the take profit, which we need to go off the 5-minute candles to see. Go to the 1-hour candles, and here's our take profit here. The good thing about the take profit is if it breaks through and starts climbing, there's no resistance, like we said, because we're at all-time highs on this index. Okay. Any questions, comments before we move on maybe to another instrument, another bit of information? I'll pause for a moment. Okay, and I'll keep an eye if any questions pop up. So where else can we look for fundamental news to make some decisions? I mean, we could look at crude oil, we could look at some other things based on what we already talked about. We could look at other indices if we want in other countries as well, not just in the US, but it's the same concept. There's a lot of momentum upward on the equities right now, optimism, particularly in the US market, about potential for lower interest rates moving forward, optimism that the war in the Middle East, at least for now, between Iran and Israel, there's a ceasefire. So there's some momentum there for the equities. And so we could look at individual stocks as well, and we can look at other indices. But it's the same concept as what we just did on the US 500. So rather than killing all the time, looking at the same concept, we could talk about something different. So, we can look specifically at the Market Buzz tool. Okay, that's in this area here. And if we go to the Market Buzz, again, you keep in mind the bigger picture. There's momentum upward right now in the equities. So then I can start to look at specific companies and try and see, is there anything specific about NVIDIA or about other companies as to why I might choose one in particular. If I think they all have reason to rise, now let me find one that maybe has more reason than others to rise if I'm going to buy on a particular stock. And so we see the technical trend here. We've got a technical signal that says buy. Okay, so technically speaking, if you read about the indicators and the support and resistance levels, they're saying uptrend. They're saying they expect an over 11% climb on on NVIDIA, for example. Okay, and so You might have fundamental reason. Now you have a technical reason with NVIDIA. What else can we look at? We can look at specific articles in the news feed related to NVIDIA. Okay, so as you scroll down, you might find something that's come out in the past few hours. NVIDIA beats Microsoft to become world's most valuable company. That just happened because NVIDIA stock went up enough, I guess yesterday and the day before, that once again, NVIDIA's net worth now is higher than Microsoft's. Now the most valuable company in the world. What's behind the rise? Okay, so let's see. You can read a little synopsis about it. You can read the entire article. So now I can read specifically about NVIDIA. Why is it beating out Microsoft in terms of being the most valuable company? Read the entire article, which shouldn't take you long, and that can help you make up your mind as well, fundamentally speaking, as to, maybe I bought on the US 500, but maybe now specifically I want to pick out specific companies, specific stocks that I think have even more momentum than the average one. And so by using the Market Buzz tool, I can find articles that have come out recently. This one was only 4 hours ago, and I could keep looking for more and see. Maybe it convinces me that when the US market opens, I'll look for an entry point on NVIDIA. And it might gap up at the open. Maybe you wait for a pullback then. You can think about it in advance and know from a fundamental perspective what you would like to do. And then it's just about finding an entry point that you like. Okay? And so I think NVIDIA looks like a great potential here based on these signals, the most recent news, and the overall macroeconomic news that we talked about. It seems like there's momentum there. So is this something maybe that could interest you? And these tools make it easier to make up your mind. Here's another article. NVIDIA highs show AI theme is still strong. So here's another article about NVIDIA, about momentum with the AI industry again. And you can read that article as well. And maybe those two articles help you make up your mind about NVIDIA specifically. Okay, and we can look at any instrument we want in the Market Buzz. Okay, we can look at an index. No problem. Look at your favorite indices, US and other. I'm mentioning US more because that's where the biggest news has come out most recently. But there would be momentum on others as well. And you can read what articles are out there and what are the technical recommendations for whichever index you might be interested in trading. Okay, here it says US 500 may rise over 3%. We already put a pending order for it to rise. Before we even looked at that, we assumed it probably would be in a bullish type trend because of the fundamental news we talked about. Well, here's a technical signal that's backing us up. The expectation, we put our take profit at 6,200, right? The expectation is that it could rise as high as 6,300 to the top of this take profit zone in the signal. Somewhere between 6,147 and 6,300 is the prediction. Okay, we're kind of in the middle, the lower middle of that take profit zone at 6,200 with the pending order that we set up. Okay, so you can use these tools to solidify in your mind trades that you think might make sense from a fundamental perspective. And I can start to read articles that relate to the S&P 500 as well. Wall Street mixed as dollar hits multi-year lows. Well, don't stocks rise easier if the US dollar is weakening? If people are selling the US dollar, what are they buying? Many times they're buying the stocks. But in any case, a weakening US dollar allows other things to rise against it easier, which these stocks, many of them, all of the US stocks, are paired against the US dollar. So these articles, that's why they're here. They relate to how easily or with how much momentum maybe this signal may or may not come true. All right, and it looks like the articles agree with the signal if you start to read into them. Now, where else can we look for fundamental news? The economic calendar. Okay, don't forget about the basics as well. I know economic calendars for many of you that have used them, seem like they're just simplistic things, and you see the recommended, or the expected, I should say, numbers, and then in the next column, when the actual reports come out, you see the real numbers. And if they're better than expected, many times the currency strengthens. If they're worse than expected, many times the currency weakens. There's a basic idea there, right? It's not complex. And the thing about our economic calendar is you can use these advanced tools to help you with predictability. And I'll show you what I mean. And we'll just use the durable goods orders that are coming out soon today out of the US. I like to look at the high level announcements. They tend to move the charts more. And if I come over and look at the volatility tool for this particular announcement, what I'll see is a breakdown of how did the charts move with the last announcements for durable goods over the past months, even over the past year. Okay, so we've got a dozen of the durable goods orders past announcements charted here against whatever currency you pick. So I picked the currency pair Euro USD. We can pick any USD pairing here because it's a US announcement, so they're all USD pairings. We can pick the time frame after the announcements that we want to analyze, as little as 5 minutes, as much as 4 hours. And I can qualify, how did this announcement come in? Meaning, if this comes in above forecast, meaning better than expected numbers, how has the Euro USD moved in the 4 hours after that announcement? And the results, 50-50. Half the time it went up, half the time it went down. Now, the ones that went down much larger than the ones that went up. I can see that. So the downward movement was as large as 64 pips, 65 pips. The biggest upward movement was 9 pips, okay? And these two went down much, much further than 9 pips, okay? So there's a trend that there's more momentum with the USD strengthening when the durable goods orders come in above forecast. It looks like very little upward movement in the hours after the announcements that came in above forecast. So it gives you an idea. If in the first 5 minutes, let's look in the first 5 minutes, if some of these would have spiked up like this one, or they went down very little, a lot of them were only down 1, 2, 3, 4 pips in the first 5 minutes. After 4 hours, the majority of them were down, or half of them were down in a large amount, okay? The average range movement, 46 pips, okay? I like to see better than 50-50, but you certainly can see a trend that the USD strengthened more than it weakened. Now, what if it comes in below forecast? Okay, those percentages I like better. 80% of the time, the euro strengthened. And again, it makes sense, right? Durable goods orders below forecast, it means bad economic news in the US, and the USD weakened 80% of the time. You see, it's almost all green movement. There's only one that went down, and it went down a small amount. The ones that went up on average were larger because one of them went up a lot. The others went up just a little, but only one went down. So again, a general trend that in the hours after this announcement, if the durable goods orders are below forecast, if you can catch a low point, let's say in the first 5 minutes after the numbers come in, you see a couple of them spike down. If you bought on either of those downward spikes, what we see is after 4 hours, most all the movement was up. You'd have been profitable on both of those occasions. And even if you'd have bought on some of the ones that didn't spike down, they were only up a couple pips, some of these, in the first 5 minutes, 1, 2, 3 pips. And after 4 hours, we're up 45 pips, 10 pips, 10 pips, and only one that was below 10 pips. So you'd have actually profited on every single one of these, except maybe one if you'd have bought within the first 5 minutes. Okay, if you'd have bought those low points. So you see an actual trend reaction that is directly related to how this set of data came in. Below forecast, huge trend for the euro to climb against the USD. Above forecast, trend for the USD to strengthen against the euro in the hours following the announcement. And the nice thing that you can see is you can place your trade even after the data comes in, because in the first 5 minutes or so, the movement on most of these movements did not carry out yet. Okay, average range movement 7 pips in the first 5 minutes, and after 4 hours, 46 pips plus. Okay, as an example. So you can look through different announcements, especially the high rated ones, high volatility expected with them, and you'll be able to pick trends and try these announcements, maybe 5, 6, 7 different announcements. Try each one maybe 10 times through the weeks and months and see which ones am I profitable with following a strategy like this? Which ones have I had the most success predicting based on how the data comes in, the directionality in the hours after the announcements? And it can just be one part of your trading strategies to have maybe 2 or 3 announcements that you zero in on: the CPI data, the PPI data, the GDP numbers when they come in out of Great Britain or out of the US or Australia, whatever time zones you're in, where you can look at the high level announcements as they come in. And what you'll find is there's a lot of predictability with these numbers. It's just about timing. Okay. And so certainly you can find some success with this type of strategy. It's really powerful information, this data that you can find within just a few clicks, all of that movement data from the past announcements. Okay. I think this is a good place to stop. Any questions, comments before I close things off? Okay, everybody. Well, thank you for joining. If any of you joined late, each session is recorded. You can catch the full session on our YouTube channel. It should be uploaded by tomorrow, mid-morning or so. Each session for all of our webinars, for that matter, are uploaded by the next business day sometime to our YouTube channel. All right, everybody. Thank you for joining. Good luck with your trading the rest of the week. Bye for now.